In the early hours of January 30th, 2026, traders who had spent much of the month riding silver and gold to historic highs found themselves nervously refreshing their screens. What just days earlier had looked like an unstoppable rally, with gold breaking record after record and silver flirting with triple-digit prices, was now turning into a dramatic sell-off. Just this week, gold had surged above $5,600 an ounce, and silver topped $121, electrifying markets and drawing crowds of investors seeking safe havens amid geopolitical uncertainty. But then came a new headline that rippled through global markets. President Donald Trump is poised to nominate Kevin Warsh as the next chair of the U.S. Federal Reserve. Warsh's potential approval would change market psychology almost overnight. Traders, analysts, and algorithms interpret the news and shift to a more dollar-friendly monetary policy, lifting the U.S. dollar and undercutting the very foundations that have propelled metals higher. As the greenback strengthened, the appeal of precious metals faded, and the rally went into reverse. Gold prices slid sharply, dipping briefly below $5,000 an ounce, a stark contrast from the euphoria of earlier this week. Silver's drop was even steeper. At one point, it plunged more than 15%, crashing toward $96 an ounce before recovering slightly. Investors who had piled into metals as a hedge suddenly found themselves booking profits, and quickly. What began as profit-taking in a parabolic run became a broader unwind, as fear of tighter monetary conditions and a stronger dollar drove selling across the board. Platinum and other metals followed the slide, mirroring the turbulence. Here's a deeper point often missed in quick market summaries. This isn't merely a correction, nor is it simply profit-taking. What we're witnessing
the market
through the start of
whispers,
valuation
other
reset,
days it roars.
where markets
Today it was the latter for
safe
gold.
haven assets
Spot prices
once
broke
the catalyst
decisively
had
through
drove them.
$4,900 this
case,
afternoon, rebounding sharply
expectations
from
of
the day's
persistent
low and
inflation
climbing to a fresh
and
all-time
weak
high
dollar
near
begins to
$4,960.
fade. Gold and silver's meteoric rise earlier this month was partly driven by investor fear. Fear of inflation, geopolitical instability, and devaluation of fiat currencies. But once traders began pricing a more stable monetary outlook with a stronger dollar, that emotional premium evaporated rapidly. The sell-off reflects how sentiment can dominate valuation in commodity markets, but also how quickly it can reverse when macro narratives shift. Where markets go from here, with the dollar strengthening and metals sliding, some analysts say that gold and silver may still end the month with strong gains overall, but only if buyers return near key psychological levels. The technical picture suggests potential support around the $5,000 mark for gold and $100 for silver, thresholds that now represent much more than simple price points. They are tests of investor confidence. For now, the metals markets seem caught between short-term profit-taking and longer-term safe haven demand. Whether this downer becomes a pause in a rally or the start of a deeper correction would depend on how monetary policy expectations evolve and whether geopolitical uncertainties return to the forefront. For more, do well to subscribe.